means everyone's semester is going well. Today, let's go over Chapter 14. Okay, discuss managerial accounting. Okay, so the first one, number one, it says identify which of the following statements best describes the functions of the management of an organization. Okay, first it says requires management to look ahead, establish objectives. The key objective of management is to add value to the business. Well, again, that's going to be the planning phase. Next part says involves coordinating the diverse activities and human resource of the company to produce smoother operation. We have a plan objectives. So now, we're going from having the objectives to implementing them. That's going to be directing. Okay. Last one, the process of keeping the activities on track. That means you started it, you got the plan going. Now you got to make sure is it running the way it's supposed to be. Okay, that's going to be the controlling function. Okay, continue on now. And then lower, recent manufacturing caused data related to its personal computer products. Let's go over each one. Is it a direct material, direct labor, factory overhead? Remember, direct material, you can directly trace it to the product. It means you can actually see exactly how much it took, how much it cost. Direct labor, those are people actually assembling the product. Again, you can trace their time to the actual product. Factory overhead, that's everything else you need to make the product that cannot be directly traced. The first one says utilities for manufacturing equipment. Well, that's going to fall under factory overhead because again, you can't really trace it exactly how much it costs. Utilities for each thing. It says the raw materials. That's what I mean, direct material, because I mean we can directly trace exactly how much chips we use, how much CPU we used. Depreciation on the manufacturing building. Again, factory overhead. You can't really trace that to each product. And the wage of production workers. That's direct labor because these are people who are actually making the product. They're actually assembling it. You can directly trace their time and cost to each product. Okay. It says here, order below the current assets for Bruce Company's balance sheet. Prepare the current assets section. Okay. In order liquidity. So again, we start with the course. The most liquid asset is always going to be cash here. And we have $62,000 of cash. Okay. Next one we have is accounts receivable. We have $200,000. Okay. Then we start with our inventory. Manufacturer's going to have 3 inventories. Okay, finished goods is, well, like I said, the goods finished. It's done. That'll be $91,000. Next one, work in process. It means it started, but not yet complete. So you have a computer that you don't have the chips in there yet. Well, you can't release it. Remember, work in process is going to be $87,000. Okay, the last one, raw materials. Everything you need to make it. Like CPUs, all the chips, the screens. That's $73,000. Again here, what you want to do now is add these 3 up. Okay, add them up, that'll be $251,000. And the last current asset we have is prepaid expenses. That'll be $38,000. Okay, so again here, take the cash, accounts receivables, the total inventories, the prepaid expenses here. We have total current assets of $551,000. Okay, next one says here, Richard Larkins prepared the following statements of managerial and financial accounting. Identify which statement is true or false. First one, financial accounting. Focus on providing information to internal users. Okay. Well, that's going to be false. Okay, because remember, financial accounting is external users. Managerial, we're doing now, that's for the internal users. Analyze cost volume relationship is part of managerial accounting. Yes, that is true. Okay, we'll get into more detail as the semester progresses. Okay, next part. Preparation of budgets is part of financial accounting. That's going to be false. Okay, budgets is an integral part of managerial accounting. Again, we'll get to more detail into it in future chapters. And managerial accounting applies only to merchandising and manufacturing companies. That's going to be false. Okay, managerial accounting can apply to any kind of company. Yeah, number 5. Managerial accounting and financial accounting deal with mainly the same economic events. That is true. We're still dealing with the economic events of the company, but it's a little bit different how it's structured and what they're reporting exactly. Next one. Managerial accounting reports are prepared only quarterly and monthly. That's going to be false. Well, the big difference between managerial accounting and financial accounting, managerial can be anytime. It could be for the hour, for the day, the week. Financial accounting is going to be more for usually just for the month, the quarter, or the year. Okay. Number 7. Financial accounting reports are general purpose reports. That's going to be true. Okay. Managerial accounting reports pertains to subunits of the business. That's going to be true. That's one of the big differences between managerial accounting and financial. Financial accounting focuses on the entire part of the company. Now, like you're doing with the computers, you'll focus on the entire company of Apple. Managerial can say, okay, how did each division in Apple do? How did the iPad division do? The iPod, and so on. Number 9, managerial accounting must comply with conjunctive accounting principles. That's going to be false. Managerial accounting get a little more leeway. He says, well, it's merely for internal users. Get a little more leeway. Financial accounting, no, you have to abide by GAAP. And the last one, although managerial accounts are expected to behave ethically, there's no code of ethical standards. That would be false. Managerial accountants, they have a very high and ethical standards they have to abide by, and there is a code of standards. Okay, next one. Number 5 says, from the following information, determine the amount of manufacturing overhead. Let's see what goes into overhead. Well, the first one is, we'll start with our factory utilities, okay, which is $15,500. Okay, next one we have is going to be depreciation on factory equipment. It's going to be $12,650. Continue on now. My indirect factory labor. That's going to be $48,900. Okay. Continue on now. Indirect materials. That'll be $80,800. Factory manager salary. That'll be $8,000. Property taxes in the building. Okay, that'll be $2,500. Okay, last part. Factory repairs. That'll be $2,000. Okay, so again, when we add all these up, my total manufacturing overhead will be $170,350. Now, product costs. Our product costs is going to be our big 3: direct materials, direct labor, and manufacturing overhead. So we see our direct materials is going to be $137,600. Okay. My direct labor is $69,100. Okay. And the last part, manufacturing overhead, well, we'll just calculate that. That'll be $170,350. Again, our total product cost, when we add them all up, that'll be $377,050. Okay, now, period cost is just what pertains just for that period. So here's the first part. Depreciation on delivery trucks. That'll be $3,800. What was my sales salary? Okay, so we go up here, find our sales salary. Okay, that'll be $46,400. Repairs to the office equipment. Okay, look at that. We see right there, it's $1,300. Okay, next part, my advertising. That was $15,000. Okay. And the last one, office supplies used. That'll be $2,640. And again, the last part, again, what we use for that period. When you add all those up, that'll be $69,140. Okay, the last one says, choose the appropriate term for statement below that describes the term. First one, performance measurement, best all aspects of performance, financial, and integrated fashion. That's going to be when you use your balanced scorecard. A lot of companies do this, when they ask to use surveys, and here they're looking at everything over, from non-financial, how was the service, were they on time, and financial, did you meet your budget, did you meet your goal? Okay, next part says, we have activities providing a product or service. That's going to be the value chain. Remember, companies are always aware of the value chain. Everything they do has to add value to the product, to the service. Again, reduce the cost associated with handling inventory. That's going to be just-in-time inventory. The challenge a lot of companies face with their inventory, if they have too much inventory on hand, it can become obsolete. It might go bad. So they always want to have things just enough to meet the demand. And a big challenge companies face at a grocery store. It can have too much because obviously it can go bad. Or even a company going back to Apple, it might go obsolete, a lot of their technology. Also, the method used to allocate overhead products, use of the activities, and current. That's going to be activity-based costing. Okay. All right, class. Hope everyone's doing well. Remember, if you all have any questions or comments, always feel free to contact me. Okay. Thank you.